West Red Lake, we're a pretty new company. First time presenting at MIF, so thank you very much to MIF and Gwen for inviting us. Our statement. So we're with Frank Justra about a year ago. A team of us got together with Frank. Everybody here in Vancouver knows Frank, knows his track record, knows what he's done. Frank is a big gold bull, believes in gold. The last time Frank got timing right, he created Wheaton River and Gold Corp. So he's on the road again to do something similar, and West Red Lake is a bit of a plan to do that. So we got together about a year ago with Frank. He wanted to get back into the business. We looked for a vehicle on which to do that. How were we going to do that? Red Lake. So we went to the Red Lake region. A lot of people know the Great Bear story. It was a big success over the last number of years. There's a lot of companies in, we say, the Golden Triangle, different areas. We saw Red Lake as an opportunity to become a developer in that region. Evolution are in that region. They have the big mines, which are the old Gold Corp mines. Great Bear was a great story there a little bit. Now you have Kinross who have come into the region, spent a lot of money on a project by Great Bear. So we've picked up originally a property called the Rowan property, and then we moved across to a property called Madsen. At that stage, a lot of people know that it's the old Pure Gold mine. A lot of people were involved in Pure Gold, and we built a team around it. A lot of people will know the team. It's the who's who of Canadian mining. Tony McCooch, people will know, who built Kirkland Lake. Duncan Middlemass from Westone Mining, and Hugh Agra from Kinross. So we put together a board and a team that really are going to build a company over the next number of years. Obviously, given the history of Pure Gold, these guys, we convinced them of the story, the plan, the opportunity. So they came on board over the last 6 months. We've been building the team. My background is, prior to this, I was with Skeena Resources, the CEO for Skeena Resources for the last 5 years. And before that, I was with Eldorado Gold. So mine building, mine operations experience. A little bit on the acquisition terms. Again, a bit like Trollis, $350 million has been spent on this project over the last number of years. It had a peak market capitalization of $1 billion. And we picked it up for a song, basically. $6.5 million in cash, 40 million shares at a 1% NSR. So really pennies on the dollar. Really, it was due to the Sprott Resource Lending, was the main senior secured lender. And we basically, they converted into equity in West Red Lake. So there's no debts on the balance sheet. And they are a 24% holder in West Red Lake. A little, just to give you a look at the infrastructure that's in place, $350 million has been spent on this project. It really shows very well. Gwen was up there earlier in the year. There's underground equipment in place. There's over 3 kilometers of underground development. There's a 1,200 meter shaft, and there's a brand new mill that's in place. Tailings facility are in place, and most importantly, all permits are ready to go. All permits have been built. Just to give you a scale of the mill is brand new. It cost $150 million to build a mill. It operated for about 18 months. There was no recovery issues. It had great availability. So it's a brand new mill ready to go. So the elephant in the room, some of the challenges of the previous operator. So obviously Pure Gold, they went into the CCAA process. We put a team together. We went down and had a look at it. I led the team, went down and had a look at why it went wrong, what were the main challenges, and how could we turn this around. So a couple of the main challenges, project financing. They took on a lot of debt. They took on $150 million of debt from Sprott Resource Lending. There was a lot of covenants around that debt. One of them was they needed to be in production. The group that was involved in that, we believe they were setting it up for a sale. Basically, it drove a lot of their decisions and forced them into a lot of different decisions on the project. They pushed back a lot of capital. They leased everything they had. They didn't put a lot of money into a camp underground equipment, they leased an underground crusher, etc. And they also, these systems in Red Lake are very deep, high grade, but very veiny systems. So they need a lot of underground development, a lot of drilling. And unfortunately, the level of work was not put in that area. And that's what we saw as the main technical challenge. And also, to be fair, COVID hit them in the middle of the ramp up. They were just beginning to get on board, turn it around, and COVID hit them. So in the end, with all those challenges, they went into the CCAA process. A little bit on the ore body. These ore bodies in Red Lake, as people know, go very deep. They go higher grade the deeper you get. They went into an area, a lower grade area that's higher up in the system called the McVeigh zone. This is a lot lower grade, but the mill is close to that area. It doesn't need the underground development. It doesn't need the focus. So that's the area they picked to go into. And unfortunately, it was much lower grade than they planned. So the lower grade, the lack of key understanding of the geology, and COVID, and a number of those issues forced them to go into the CCAA process. So our focus a little bit, we did see though very clearly in the last 6 months, as they were beginning to, they pivoted a little bit, they brought in some key people, and in the last 6 months of the project, they were just beginning to turn it around. Unfortunately, they ran out of time. So our focus over the next 12 to 15 months is to really get into this higher grade system and really drill for the next 12 to 15 months. The level of definition drilling these systems need is they need to be very, very tightly spaced. And so that was not done with the underground. So that's the level of work that we need to do in the next 12 to 15 months. A little bit on the ore body. It's very, very high grade, and it's higher grade the deeper you go. These drill holes here are outside the existing resource, and they show the opportunity to grow the resource that's already there. Very, very high grade, good mineable widths underground. There's just over 2 million ounces of 7 gram material on the books at the moment, and we believe that will grow over the next number of years as we drill the ore body. The real prize here is the 8 zone. I don't know how many people are aware of the 8 zone, but in our review of this system, the 8 zone is equivalent to the high grade zone at Red Lake that turned around the Goldcorp mine. It's in the same sort of rock package. It has very good existing drill holes on it, 300 grams sort of over number of meters. So it's a very, very high grade system. It's very deep. Pure Gold tried to drill it from surface. They never got down with the deviations, etc. But by the middle of this year, we'll be down deep enough in the system to drill that out. We also picked up around 47 square kilometers of targets on the region. And again, some of these have small resources on them. Pure Gold didn't get the chance or opportunity to drill them. So that gives us a lot of opportunity to create a hub and spoke model in the Red Lake region. There's other small properties around there close by. Hasaga sits in Evolution now. And the Buffalo project sits with Goldcorp. So there's a lot of opportunity to consolidate in the region. We have the only mill in the region of Red Lake owned by an independent. We also have another property called the Rowan property, which is on the other side of the lake. It's 800,000 ounces at a 9 gram, which is a little bit higher. And that was the original property in West Red Lake. And our plan, we have been drilling that for most of 2023. We've got some very, very high grade results. And the plan is to create this hub and spoke model in Red Lake. We have a mill. The mill can be expanded, and we have the ability to truck in ore from other sources and other feeds into the project. A little bit on our Rowan property. A typical Red Lake system goes very deep, high grade. And we've just drilled it down to 500 meters at the moment. We've had some spectacular results all of this year. And we're just getting together and putting a resource model together and an updated resource. Our plan for now is we've really only got the property in June of Madsen. And now we're starting to get underground and drill Madsen out all of this first half of the year. And then we will switch over to the 8 zone. A little bit on our capital structure. Obviously, Frank is a big shareholder. Frank owns 11% of the company. Sprout Resource Lending, just over 24%. We brought in VanEck in the last financing, and we brought in a lot of big funds like Terra Capital and APAC Resources. So very, very strongly held by good shareholders who are there for the long term. We've about 222 issued and outstanding. Market cap today is around 150 million Canadian dollars. And over the last 6 months since we took the property, we've raised over $50 million. And as others have said, which are pretty much the worst capital markets for a long time. So the fact of the team, the backers, what Frank has done before, the team we have in place, we've had very good success in the market. And the plan is to use this, get Madsen up and running, and then build upon that and grow a mid-tier producer. So thank you. We have just over 2.8 million ounces on the books at the moment, reserve in inferred and indicated, and we expect that to grow. And you can see there the 8 zone, it's currently has 87,000 ounces at 18 grams, and we do expect that to grow with more drilling deep down in the system. And thank you very much.